Hello everybody, hope you had a great Tuesday. It is June 13th. Of course, we have CPI now behind us. But before we get into it, if you're enjoying the content that we are providing, just remember that it is for educational and entertainment purposes only. Please subscribe to the channel and smash that like button, really helps out the channel. And don't forget to turn on the notifications. All right, so we're going to keep this one quick. Of course, we have the week from hell tomorrow. Now we have FOMC, and markets probably going to be a bit tentative coming into the rate decision. So again, as I've been saying in all the videos, make sure you're playing defense, being careful, and we'll keep this video pretty quick. As same thing with CPI. Anything that happens or anything that the Fed says can certainly put a big move in the market in either direction. But we've seen some nice continuation, right? Markets gapped up into CPI, which I was kind of surprised to see, and nice continuation of this flag pattern that we were watching. And we did come up, we hit that 435 area. The high today was 437.33. Markets were up about 0.66%, about $2.85 or so. But we're getting to this major area here that we were talking about just in time for CPI. You can see this base here where we broke down here. So we're getting into that area where we'd certainly like to see some follow through and a close over this 440, really 437.80 zone. But again, with CPI, I mean, the odds of that happening are pretty slim. We're getting even further extended here though from the moving averages. So want to definitely keep in mind that risk to reward is definitely very not really favorable for longs. Sure, intraday trading, that's fine, but as far as swing trades, I'm not really looking to do much. Of course, with the data, that would be silly anyway. But let's just get real quick into a loose plan tomorrow. We'll have to see how we open up, but let's just take a quick look here at the fib, and let me first extend us to this new swing high, which was at 33. Okay, perfect. All right, so bigger picture, I'm still going to be watching this 429, 450 area, that retest of a potential the base here that we broke out of. And we're getting some nice confluence with the 9. So if we do see a dip down tomorrow, something drastic, I will be watching this this area close to that 430. You can see here the 9's just right under, probably will pull up a little bit tomorrow. So if we come back, nice confluence, break under, recapture, and then we'll look for moves higher. We definitely have to mind the gap. So if we see some big moves, that could be potentially filled, and that's going to bring us down about $3 or so. So we want to watch out for this gap. That's definitely something to be aware of. They tried to fill it today, but were unable really to get too close. So let's go real quick into the day trading fibs that we have been watching as well. And I am going to take a new, is this the right one? I'm going to take a new swing low here. Okay. So that 30 area is still, and a lot of these areas are still valid here. As you can see, the 23.6 around that 4 432.40, 432 area. This whole area is definitely what we're going to be wanting to watch. If we do get a sudden drastic move to the downside, or we're selling, we possibly could see some buyers come in and support this zone here. But the these two areas are really the main zones, right? All the way down to 432, and then 430 to basically 429 or so, 429.25. This is what triggered the breakout, right? We went over this, and now this is what triggered this. So these are the two immediate areas that are going to be needed to be defended by the bulls to keep this rally going. We start to break underneath, and then we could potentially see some bigger retracements, right? And so definitely watch these zones. If we do break under and we come back and retest, all right, that might set us up for a nice little short, and just taking it level to level down into this area. And then if you miss that move and this continues to break, then come up, buy. You got to see some buyers come in. It comes back, retest. If you see the sellers, comes back down, and then probably look at this volume point of control around 427.60 or so. But profile has kind of stretched itself out a little bit better. We are right at value area highs here. So I'd be surprised to see if we actually can get over. But of course, with FOMC and Powell, technical analysis is virtually useless. This thing could rip up, another $2 or $3 or drop $3. So that's why we have a plan for both sides. But as you know, with FOMC, usually the first move is fake. So let's just be aware of that. When the decision comes out, I personally don't rush into calls or puts. I'll wait until Powell comes in. I'll let price action kind of do what it needs to do, and then I will decide about engaging the market. But usually it goes one way at first, and then when Powell speaks, it goes in the opposite direction. But I also have seen it do it 3 times. It could go up, down, and then back up again. So almost that the first move is fake, that it goes up, it comes back down, and then it resumes in the original direction that it made. So that's kind of also another theme that I have seen as well. So those are 2 different things two different scenarios that could play out tomorrow with FOMC. So definitely just a little tip for you there. But like I said, these main areas. Now, again, you don't buy if it's just knifing down. It comes into this area. You don't just randomly, you buy like that. You got to wait to see the buyers come in. And then, if they are supported, okay, then, or if we break under, recapture, and we start to move, okay, then you've got a bit more confirmation. But don't be tempted to directly buying these, especially during FOMC, because it can easily just butter right through, right? But like I said, in the short term, these are the key areas that the bulls are going to need to defend, as I mentioned, and breaking under, you could see some retracement. Under here, if we broke under, retest, and come down, I'll be targeting here for my main. I'll be mostly out if we got down to here. And that's not bad, 432 or so, bound to, 429, maybe 429.25. Okay, I'll take that. But like I said, if we break under, we could continue down, and I'd probably be targeting that POC. But what could we look for as far as higher? Again, I told you, yesterday we went over, gotta see over that, this 3, well, I do like that we're holding 435, but, we need to take out this swing high and ultimately that psychological number just above that 440. And then I was talking, and this is a little bit more macro, but I was talking about that inevitable drift to 450. But, we could totally come back and just, into the 50 here, if it's supported and recaptures, and we could even come that far, once we start to really break below. I mean, bears have a lot of work to do overall. But I'll be watching for those fake outs tomorrow, and still trading cautiously and less, because I don't want to engage the market in this risky environment too much. Options, at least the IV has settled a bit, so that is good. But but I'm still erring on the side of caution. I haven't really touched options much this week. I was hoping to, but I really haven't had an opportunity. Some of the growth names that have been running have given some nice opportunities. I know Nvidia was pretty strong today, but I want to wait till things settle, and it's just a little bit less volatile overall. But yeah, so that's pretty much what I'm watching here. Let's see what we get. I hope this helps, and have a good FOMC day tomorrow. I wish you the best in your trading, and take care.